Of course, we can talk about what's going on now in markets, and you can ask additional questions. I'll try to keep it entertaining. I see some of you are not familiar faces to me, so it'll be the first time for you. So just wait another minute before I start, and we'll get going. So just please let me know if you can hear me, see me, and see my slides, which are more important than seeing me, because the focus is on what I'm talking about. So yeah, I see here some new people, which is nice. If you're doing well. All right. So it's 4:01 here in Barcelona, Spain, and 3 p.m. GMT. It's Christmas Eve. Hi there. Hi, Christian. Hi, Amiz. Hi, everybody else who is here. Okay, so let's kick it off. Thanks for coming on Slow Day in Markets because it's Thanksgiving in America. Okay, so quick presentation of myself. I'm Yohay. I used to be a retail trader, a computer programmer. Founded Forex Crunch back in 2008, and 10 years later I joined FXStreet, where I am leading FXStreet premium product and content, and I focus on fundamental analysis, which is also what we're doing today. And yeah, I'm here also to plug, to do a quick pitch of what I'm doing here at FXStreet Premium. We have actionable analysis signals helping you make informed decisions, and you can ask our seasoned professionals. One of them is myself, yours truly. We have a team, Ian, Ross, Khaled, and Guillaume, of analysts at your disposal. I think it's the biggest advantage of our service, and you can also learn new stuff and improve every time. Yeah, and we currently have a Black Friday sale like everybody else. Tomorrow's Black Friday, and you can download the apps, the mobile apps of FXStreet to sign up and join FXStreet Premium. Okay, so that was a very quick introduction, and let's hit the road with gold. So a lot of you are trading gold. Gold had a fabulous year, reaching new all-time highs quite a few times. That was impressive, wasn't it? So yeah, even despite the big downfall, it suffered after the U.S. elections. We're still seeing it at over 2,600. And why is it rising and what moves gold? That's what we'll talk about now. So we'll talk about gold as a safe haven or not. We'll talk about gold and yields, for me the most important thing. We'll talk about de-dollarization, another factor. We'll talk about gold and its relation to other commodities, which will provide some insights, and if you're trading a bit more of an advanced topic. And we'll talk about the best times to trade gold. And yeah, and we'll have time for questions as well. So why is gold considered a safe haven? So this is something historic. Gold is a safe haven because people think it's a safe haven, but also because gold is an ancient form of trading, of store of value, of exchange. I live here in Spain. The Spanish Empire extracted gold out of South America. Gold was very valuable then. It was valuable during the biblical times, during the Roman Empire, and all the way to the 20th century when the Western developed industrial world wasn't the gold standard. So now we're not on the gold standard, but gold is seen still as value of wealth. Okay. So the theory is, and it was always in the past, that gold, you cannot create out of thin air. It never erodes. Yeah, you know that song by Spandau Ballet. Anyway, 80s song. I don't know how many of you were born when that song came out, but it's always dear, and it cannot be printed. Alchemy doesn't work, and it doesn't lose value. I mean, it doesn't erode. So people see it as this hedge against inflation. So if you hold on to gold, you'll be safe against inflation. That is not always the case because when there's inflation, central banks raise interest rates, and when interest rates rise, then you have other things that are more valuable. But it works as a safe haven if people believe that it's a safe haven. So that's called speculation, and that's called belief, if you wish. There's also FOMO, fear of missing out. Okay? It does work as a safe haven in specific cases. So, oh, I jumped too many slides. Look at the Middle East. When we're talking about hostilities in the Middle East, that's when gold reacts quite well. So when the biggest example was on October 7th, 23, when Hamas surprised Israel and the world with its brutal attack, then we saw gold rising because of fears that this conflict would be much wider. Each time there was such fear of a wider conflict, gold got a boost. When these fears disappeared a bit, let's say last time when Israel attacked Iran, and it was seen as a limited attack, then gold lost its shine because there was less fear of wider damage to the global economy. So that haven, Middle East conflict. So that's something to take into account, but not as a hedge against inflation. And now we'll talk about its role around inflation. Oh, look at yields. I know it's boring. US Treasury bonds are not the most fascinating market, but they have a lot of power. It's the world's benchmark, 10-year US debt. And if gold is perceived as a safe haven, it competes with the safest haven of all, US Treasury debt. So when basically the logic is this, and it works most of the time. So when the value of gold rises, when yields are on the rise, then gold falls because gold has tough competition. When yields fall, it means you'll get less for your money by holding these treasuries, and gold rises. So you see there's an inverse correlation. Yields up, gold down. Yields down, gold up. Okay? Now, when does it work and when does it fail? It works best when there's a strong reaction in yields. When it's a jump of 10 basis points, which doesn't sound like a lot, but in these heavy bond markets, it's quite a bit, you can see a significant movement in gold. But when it's just 1 basis point, 2 basis points, just a bit of fluctuation, in a day like this, when there's a high, then you don't see a lot of impact on gold. I want to return here just one more second about the safety of US debt. So is US debt really safe? So far, 248 years of existence of the United States of America, it always paid its debt. Okay? And it's the world's superpower. So that's also an advantage. But there is always a risk. And the United States saw a credit rating downgrade from several credit rating agencies. Now, there can be a situation when there is a conflict in Congress and the US does not pay its debt. So far, all these events proved just a political theater and never materialized into something worse. The US always pays its debt. Once the US does not pay its debt, that could be a good sign for gold, but I don't see that happening anytime soon, especially not now when one party has full control of government, 2 houses of Congress and the White House. Okay, so another thing, when it doesn't work, it's a sign of what's going on outside yields. So if gold rises with yields, it means that yields are up. Gold should go down, but it doesn't go down. It goes up. That means that there's high demand for gold, and it means that gold is strong, and in the next release of data or the next opportunity, it could rise even more. Now, when gold falls with yields, gold is weak. So even in such a case, the precious metal has favorable conditions to rise, But no, it falls. It means there's lots of selling pressure and that it's going to fall even more. Continue. Maybe I'll do a small pause if anybody has questions about what I've been showing so far, because I think this inverse correlation, gold and yields, is one of the most important things. We talk about it a lot. Okay, I don't see any questions. I'll continue to the next topic. De-dollarization, or as I call it, long-term demand for gold. So the world is becoming more fragmented politically. The first signs were in 2012, when gold was very weak and the Russian central bank began buying gold. Then came 2014, when Russia invaded Ukraine for the first time. Then it accumulated even more. Now, since then, Trump came to power in 2016, 2017, and the trade tensions with China intensified quite significantly. With Biden, it didn't change a lot, but now Trump is going to rise once again. So Russia, China, and also India are accumulating gold. This is very gradual. They don't want to buy any price, but there is this ongoing demand for assets which are not the US dollar, for diversifying away from the currency. I still think the US dollar is the world's most important currency and will stay so for the foreseeable future. But some of the money that was held in central bank reserves in US dollars is going to other assets, and one of them is gold, so that gives precious metal a boost in the long term. So I want to talk about acceleration of this demand came with COVID and of course with Russia's full-scale invasion of Ukraine in 2022. So this diversification is also China, which wants other countries to use its yuan, but they're a bit reluctant because it's a closed currency. India is growing in its importance, but it wants to keep things balanced, diversify away doesn't want to be dependent on one single currency or one single country. And this is a growing factor boosting the price of gold. Okay, let's talk about, you've traded gold for some time. You're aware of the correlation between gold and yields. You're aware of the Middle East conflict, about de-dollarization. And now you're interested in, okay, what else is there out there? So we're talking about other commodities. Let's talk about silver. Silver is a small brother, a small sister of gold. One thing I'm watching is the gold-silver ratio, the price of gold in relation to the price of silver. So a nice phenomenon to be aware of is that when the gold-silver ratio hits extreme highs, when it's overbought, then we have usually an opportunity to buy silver. That is proved again. And gold and oil are only correlated when there is another cause pushing them to this correlation, and that's the Middle East. So when tensions rise in the Middle East, there is a risk to the export of oil from the Persian Gulf through the Straits of Hormuz. We're talking about something like 20 million barrels per day coming out of Iran, Kuwait, Iraq, Saudi Arabia, Bahrain, Qatar, United Arab Emirates. And if there is higher geopolitical tension, the price of oil rises, and so does gold. And when tensions ease, both assets decline. So there's no correlation. I mean, it's not that one asset impacts the other, but when there's something in the Middle East, either positive or negative, then we see gold and oil moving together. Okay, and stocks of gold mines. There's Gold Barrick and other ones. They are correlated because, well, if they extract gold out of the ground and the price of gold rises, these shares rise as well. And when gold falls, these shares fall as well. So sometimes you can see a good correlation there, but it's important to note that these companies also mine other metals, and there's a lot of demand for cobalt, palladium, and copper, which I didn't mention here. But a small anecdote is that electric vehicles have a copper content that is 4 times those of regular petrol cars. So there's more demand. So these companies usually extract metals as much as they can, and their prices depend on prices of other metals as well. Okay, let's talk about timings of gold. Timing is always a difficult subject when it comes to trading, because even if you know the trend, there's always a counter trend, and there's some things that are common to gold. So let's talk about them. Yeah, we'll start with something that is more fun to talk about, but not the biggest mover. Indian wedding season, which is coming up soon, and there are several auspicious dates. So it is common in India and also in other countries to gift gold to, and that is when ahead of these wedding dates, the price of gold rises. Usually after the season, the price falls, or just during the season, because it's a sort of buy the rumor, sell the fact. In general, there is much more speculation about gold than real demand or lack of demand, okay? So, but these auspicious dates in the Indian wedding calendar, they're something to be mindful of. Here's the more important thing. Gold tends to fall in the autumn, when leaves fall off the trees in the northern hemisphere. So basically this season, there is a general seasonal pattern that goes against the price of gold. Okay, usually the same happens with stocks and oil. October, November are usually bad months, but like with any trend, like seasonality, there's always a counter trend. So this year we saw gold rising very nicely until election day in the US, and then it tumbled down. And now it recovered, but not all the way. So is the seasonal pattern repeating itself or not? I think this year is special, but in the long term, you have gold prices falling more times than not in the autumn. And zooming in a bit more, gold tends to have a U-shaped week. So it begins the week high, falls in the middle of the week, bottoms out there, and rises towards the end of the week. Does this phenomenon repeat itself every week? No, but it's something to take into account. And yeah, and to be more precise with timings, going into hours. So like with any asset, gold rises and falls, moves a lot around big economic events, because that's when investors are itching for action. That's when they're ready to react to news that impact interest rates. When interest rates rise, once again, gold tends to fall. When expectation for interest rates to fall, that's when gold rises. So I would also add, and this is an important thing, sometimes the data doesn't mean anything, but markets are on hold, waiting to act when for the data to come out, and then they move regardless. So you can see that around 8:30 Eastern time or 10 Eastern time in the US, when data comes out, boom, gold moves, other assets move as well. Okay, so that's always something to take into account. As always, I tell people who say I'm purely technical. Okay, I respect. I come from fundamental analysis, but technical analysis is something that is important. Just know when the data comes out, because that can destroy your trade. That's when technicals can momentarily get out of sync. And another time when assets move a lot is around the openings, when in London, Tokyo, and New York, when the markets get going, that's when there's more price action, and then things die down towards the end of the session. And that's true with all assets. Okay, that's what I have prepared for you today. once again, for those of you who've seen this presentation for the first time, I hope you learned something new. And for those of you who have seen me before talking about this asset, I know it's the most popular asset. Then there's, I hope, it helped you learn a bit more, and you can learn more by asking a few questions. A few minutes to answer your questions right here. So I see here quite a few people in the room, and you're welcome to ask questions. If you want me to talk about other things as well, in any case, I'll remind you we have our Black Friday sale. If you're not a premium member, I think we have an amazing, well, I'm biased. What else would I say? But I think that being able to ask our analysts questions is one of the best things we offer. And we're 5 analysts with lots of experience, and you can access signals and our trade plans and learn by doing. I see a few people writing. So, yeah, waiting for your questions. Today I'm here at the FXStreet offices. I hope you don't hear all the noise. Yeah, I see a few people writing, so I'll wait to see what your need current scenario for gold considering current geopolitical situation. So the current geopolitical situation has calmed down. In theory, Israel and Lebanon reached a ceasefire agreement, but the ceasefire is super, super fragile. There have been violations. I won't get into the politics, who is right and who is wrong. What you need to know is if it intensifies, it's good for gold, and if it calms down, it is not. What do I think can happen? I must say I'm a bit pessimistic. I mean, I want to be optimistic that the ceasefire holds and that we'll eventually have full peace. To be more realistic, the war in Gaza is still not over. Iran vowed to retaliate against Israel after its attack, counterattack, cycle of revenge. So if I had to bet, I would be betting on the pessimistic scenario of the war intensifying, which would be bullish for gold. Again, this is not the only factor. The fact that the U.S. economy is doing very well, that means interest rates are not falling very quickly, and that is bearish for gold. Which factor is stronger? Usually, the U.S. economy outweighs the Middle East. Please repeat the yields, and also for those gold mining companies. Well, it's the price of gold having effect on the gold mining companies. So one way that some of you prefer, or some, I don't know exactly who's here, but prefer trading gold is by trading the proxies. The proxies are gold mining companies. So when the price of gold rises, shares in these stocks rise a lot. And when they fall alongside. So that's where we have some correlation between gold and gold mining companies. Regarding yields, basically you need to know is that there's an inverse correlation. When yields rise, gold falls. When yields fall, gold rises. I think UBS predicted 2,900 for the end of 2025. Do you think 2025 will be similar to 2024, or will we just consolidate? I see long-term bullishness in gold because of the diversification away from the US dollar, and one of these places money goes to is gold. And I think that tax cuts will also help push money towards gold. So I see a bullish year for gold next year. The numbers, the end of 2025, that's too far. I think, personally, I think it can reach 2,900 before, but let's see. Any additional questions? Okay, I guess no more questions. So if you're not yet a premium member, you're invited to join FXStreet Premium. And yeah, I think Ask Our Analyst is one of our best features. And that's it. So I hope you enjoyed this session. And we'll see each other around on the channel. Okay, so that's it for today. Thank you and bye-bye. One more? Okay, one more question. Okay, what do you think of the US Tech 100? Well, if you played around with ChatGPT, you're probably very bullish on on AI and US tech. There's lots of hype there as well. I mean, lots of future gains are priced. I think stocks in the long term are bullish and tech is in the lead. So I think there is a bit of overweight. So maybe in the short term, some falls, but in the long term, I mean, let's say for 2025, I see the US Tech 100 rising, the Nasdaq. Another question? Yeah, I see somebody writing. Yeah, I'll stay here until the bottom of the hour, 3 more minutes to answer your questions, and then I'll disappear. I wish you all Americans a happy Thanksgiving, and yeah, wait for that probably last question today. Sorry. Yeah, you have a question? Please go ahead and ask. Yeah. So yeah, once again, download the FXStreet app. They can give you a sneak preview. Well, not a preview, but we'll have a new version of the app as well next week or in the following. Gold current scenario. Yeah, well, current scenario for today, nothing at all because it's Thanksgiving. Tomorrow I also expect a quiet week. And I think next week we're expecting a bounce back in non-farm payrolls. I'm not sure we'll get all that bounce back. So I think we'll see gold rising during the week, but then lose some steam when we see that the job gains are not sorry, I got a bit confused. So I think job gains will be disappointing next week, which means that gold could consolidate, rise a bit, fall a bit during the week, and then maybe get another boost toward the end of the week. Next week begins with all those leading indicators towards non-farm payrolls. But we'll have full previews of non-farm payrolls and their impact on gold early next week. There are quite a few other pieces of data, such as the ISM manufacturing PMI, ISM non-services PMI, ADP jobs report. Quite a few figures are lined up. Okay, so that's it for me for today. I hope you enjoyed it. I gotta go, and I'll see you around the channel, Ask Our Analysts. Thank you, and bye-bye.